Everyone, Lance here with the Future of Wealth. In today's video, we're going to cover a controversial topic. We're going to look at the IPO market right now in 2019. I'm sure we all heard the headlines. In fact, I couldn't turn on the TV without seeing WeWork IPO. So let's go over a history of this IPO and then look at other names that have came out just really in the past year. We're going to look at Smiles Direct, Chewy, Pinterest, and then how everything started with Uber and Lyft last year, where Wall Street, they're trying to feed us their BS, and Main Street, the little guy and girl, me and you out there, we're not buying that crap anymore. So WeWork, the company had a $97 million valuation in July of 2012 out there. May 2013, valuation goes up to $440 million. Okay, that's fine. Back in the bull market, in fact, we are in a bull market, but back in the growth phase of the bull market, valuations, were multiplying at a rapid rate. So we'll give it that. August 2017, $21 billion valuation. So we're up over 20-fold from just of July. We'll keep it there. January 2019, start of the year, $1 billion in insider stock sales to SoftBank. SoftBank, a very large investment fund, putting money to work in WeWork, no pun intended. So they're already selling the insiders. This just in 2019 alone, this year. Goldman Sachs doing the underwriting for the IPO. They value WeWork from 60 to 90 billion range. 60 to 90 billion dollars. That is September, the beginning of September of 2019. How do they get that valuation? Unicorns, ponies, shooting stars, they can do it. And they're trying to sell it to you. That's right, at $90 billion. So a few weeks later, Goldman can't get that $90 billion valuation, but the insiders and WeWork, they need the company to go public because basically they need to get out. So they want to dump their shares, their stock to you. Hopefully someone will buy it. Us, that's right, Main Street out there. They can't even get $10 billion for the valuation. So what happens? The IPO gets canceled. And the company, in my opinion, may not even be a company in the next couple months. CEO getting fired. What's really screwed up about this process, the CEO still kept $700 million. Granted, he was no longer flying in his private jet or the board terminated as CEO, but $700 million, in my opinion, is quite the chunk change. So how can you make money? And we know the history. How can you make money in these new IPO stocks right now today? Well, there's one thing you have to be aware of, okay? Because I don't want you to fall into this trap that you're seeing from these banks. These banks, they want to sell the shares to you. If you look at a company here, and this is one I've been getting emails on, Smiles Direct, SDC, dental company. All right, dental company. Hey, looks good to me, right? Who doesn't go to the dentist? Well, company goes public, pops the first day, then fades. So it goes from about $20 a share to about $14 a share. So what happens? And this is how corrupt the banks are. Every underwriter, okay, your JP Morgan, Credit Suisse, Merrill Lynch, Citigroup, what do they do just yesterday, October 7th? Because they can finally initially analyst coverage. They upgrade the stock to a buy and give it a rating of outperform. I want you to look at some of these price targets, 24, 31, 22, 24 a share that they're saying, and buy, outperform. Well, for the first time in a long time, and I'm very proud to say this, Main Street didn't buy that bull crap. In fact, the stock popped pre-market to 15, closed the day down under 13 a share. They drove the share price down, even though every investment bank told you to buy the stock. That's what I love seeing. Now, how can you pick a spot? Let's say you do want to play some of these new IPOs and you think they're undervalued. Well, I want to look at a company named Chewy, right? Everyone loves their pets. I love mine. The pet store. The stock near 52-week low after a IPO. It like these new IPOs, Pinterest, Chewy, they're taking hits. They're right near their 52-week low. But what I like to look for before buying these companies is the directors, are the insiders actually going to put their money to work and actually buy the stock? Well, this was a very bullish signal. one of the directors, James Starr, on 10/2, so literally 6 days ago, bought stock. He bought 21 and 20,000 shares, about $1 million. You can see our total proceeds, 497,000, 496,000 of stock. He has 91,000 shares now, and you can actually click on the forum here, and you can see he bought stock right here, A for acquired at 23.18. So when you have an insider buying their stock, in my opinion, that's very bullish, and just from trading in the past, the history, very bullish. What you can do is use this to start building a position, put a stop loss since they are IPOs, relatively volatile, 10 to 15%, and then look for that to build some confidence in that IPO stock that you want to buy, and wait for the dust to clear and make some money in the markets. Thanks, everyone.